We wouldn't have thought, right, over the last few years that it would ever get there. And if you look at the average spread between 10-year Treasury and 30-year mortgage rates, over the last 6 months, it's been at 1.9%. So with 10-year Treasuries below 1%, theoretically, you would think it could. But typically when we see 10-year Treasuries drop the way they have over the last week or so, we don't see quite that same level of reduction among 30-year rates. I think we're still, at least for the near term, likely a little bit above 3%.
You have some great information about how many borrowers we could be talking about to refinance. 11 million, 12 million, 13, 14 million. I mean, what do you guys kind of estimate here?
Well, so as of last week, when Freddie reported interest rates, they were right around 3.45%. And at that rate, there are about 11 million homeowners that we estimate could save about 0.75% through refinancing. If rates fall this week, right, Freddie will report their numbers tomorrow morning. If we do see an eighth of a point drop, that number jumps by 15% to 12.8 million. If it drops a full 0.25%, we're now up to well over 14 million homeowners that could benefit from a refinance, a 30% jump in a single week span.
What about new buyers, and what is the impact of all of these falling rates having on boosting home prices as a result?
Right, and we've really been seeing that trend play out over the last 18 months. If interest rates have fallen from around 5% in late 2018 all the way down to 3.5% and below now. And really starting late last fall, we started to see the housing market start to shift. You saw home price growth rates go from just over 3.5%. They're already up to 5%. And last time we saw affordability at this level, they were between 6.5% and 7%. So still some potential upswing there in terms of home price growth.
Right, which in a way could make housing less accessible to people, even though you think low rates would help. Let me just go back to where I started. You said usually there's about a 2-point spread, 1.9 points or so between the Treasury rate and the 30-year mortgage rate. So Is it possible that we can fall further here, or is there a structural reason why at some point these banks and mortgage companies need to make a profit? They'll keep it. It kind of reminds me of when oil prices fall and people watch what happens at the gas station. Will they try to keep that spread where it is or even wider?
Right, and I think it's certainly possible. You tend to see the spread lengthen the further down Treasuries go, and we're kind of in uncharted territories in terms of 10-year Treasuries. We've never seen them below 1%, so somewhat of an unknown in terms of how 30-year rates will react. But typically you see a little bit more modest movement among 30-year rates, a little bit more spread when rates fall as much as they have.
Would you refinance right now?
I mean, it's certainly something to look at. We've refinanced in the past, and we already have a low rate locked in, but certainly something that I think homeowners should look at, especially homeowners that have larger first lien balances. You're also seeing homeowners kind of look at the record levels of equity that there is out there in the market today. They're looking at record low 30-year rates as well, and we're seeing large volumes of cash out refinance activity enter the market as well. So that could be a growing trend here in 2020 as well.
The house is the ATM once again.
Yeah, I mean, hopefully not to that degree.
Right.
I think we're seeing a lot more conservative behavior today than what we saw in 2005, 6, 7, but certainly an increase in that type of activity.
Very, very interesting. Andy, it's good to see you. Great information. Thanks.
Absolutely. Thanks.
Andy Walden is with Black Knight.